Just 10 years ago, interest rates stood at about 30%, making credit in Kenya not only among the most expensive in the world, but probably the hardest to access for ordinary citizens. Since then, the prohibitive rates have gradually come down, largely due to increased innovation and liberalization of the market, reaching a low of 13% and stirring growth in commercial banks' loan accounts. The recent increase in the central bank rate from 7 to 11% has sparked off corresponding increases in the lending rates of commercial banks, threatening the gains previously enjoyed by borrowers. Critics say commercial banks have taken advantage of the liberalized market to more or less set their own rules on the interest charged on loans and deposits. But Trangwe MP Martin Ogindo wants to put a stop to this practice through a proposed bill which he says will regulate the price of money.
We cannot rely on their goodwill to ensure that money is available to people who need it for investment.
Ogindo hopes the proposed law will enhance financial access, but Equity Bank Chief Executive James Mwangi says it will work in the opposite direction, making the Kenyan market unattractive.
Only 8% of Kenyans have borrowed. So you are literally making laws for 8% and denying 92% of Kenyans having access to finance, because the market will only access finance to them at the right price.
According to Mwangi, the government should instead work towards creating a stable macroeconomic environment to allow the market to regulate itself, as no bank will be willing to lend its money at interest rates below the rate of inflation, which currently stands at 17.3%.
The best regulator is the market. Doesn't mean that there should be no regulation, but it's framework. But you cannot registrate interest rates.
Commercial banks may, however, find themselves isolated, as Treasury and the Central Bank have previously expressed reservations over the prevailing lending rates, saying they are not reflective of the true condition of the economy. Wanjiru Gaitho, Citizen Business.